Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly demand and support area. From here, in fact, all this previous rejection to the upside was created. Then the market created this M pattern and is currently testing the exact same zone. Now, in the case of an M pattern, what you would naturally expect after the creation of such pattern is a rejection to the upside, completing the pattern at the neckline, which at the moment the market already started to try to create with this rejection to the upside away from this level. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the structure is quite clear. We do have very strong structure at this level. This zone, if we also extend it to the left, we can see how it was already acting as previous weekly support here, preceding all this rejection to the upside, again support here, then the market broke below the level. And that previous support was turned resistance. At the moment, the market is approaching the exact same resistance zone from which, if the market will manage to reach it, there is a possibility of seeing a rejection to the downside. So from a weekly standpoint, it seems like the market is trying to go and test what kind of liquidity there is inside of this zone. So let's keep this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is quite clear. I did speak about USDJPY just a few days ago when the market was at this level, and I explained all the reasons for which we could expect first this correction and then the continuation to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. Now, we can identify also at this level what kind of zone the market is currently rejecting to the upside, because this is not a simple structure level. This is actually a confluence of support zone. In fact, if we look closely, we can notice how this area was already acting as previous daily resistance here, from which this red candle was created. Then the market broke above that zone. And what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. And we can also notice that as we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can notice how we have the 0.32 and 50% retracements here lining up perfectly with this previous resistance turn support, creating confluence of support at this zone. And when you have a confluence of support area, you have an increased probability of seeing institutional longing inside of the zone, which at that point further increases the probabilities of a potential rejection to the upside away from the area. So here on the daily, the market is at the moment rejecting to the upside quite aggressively a strong confluence of support zone, so an area inside of which there is an increased probability of seeing institutional longing. Speaking about institutional longing, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the JPY, the first thing that we have to keep in mind is that if we're looking at the data for the JPY, we're actually already looking at JPY USD, because all currencies on the spot are traded against the USD. And we can notice how with the last reports, net positions have been massively increased. We went from having minus 184.2k net positions up to 56.8k net positions. So essentially, institutions went from having more shorts than longs to now having more longs than shorts on the JPY from an institutional perspective, reaching 97.3k longs compared to only 40k shorts. So as institutions are longing the JPY, this makes the JPY stronger, which makes USDJPY weaker. So what this means is that if now institutions will manage to reach this zone, so this area of previous support, turn resistance here, which is currently still acting as resistance here, at that point, there is a good probability of seeing a potential reversal away from this zone. So from a daily perspective, if the market will now go and reach this area, rejecting the confluence of support to the upside, in this area, all this zone here, there's a good probability of seeing a potential reversal, essentially the market rejecting that resistance zone that we have just identified, because in the long run, it's clear that institutions have moved back to the bullish side for the JPY. So at least a short-term correction away from this area seems quite likely. So if the market will reach this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, at that point, I wouldn't be surprised to see a potential rejection to the downside away from that strong weekly structure area. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.